So today's talk is going to be about achieving financial success for cannabis businesses. All right, so my name is Naomi Granger. I live in Las Vegas, Nevada. Andrew Hunzicker. We both have over 30 years combined of experience in accounting. My background is public accounting. I've worked in 3 of the 4, and I've done audit, external audit. I've also worked in corporate as an auditor and doing month-end. And then Andrew and I partnered. We are the national leading experts in accounting, and we've created a course where we also teach other accountants how to do accounting properly for cannabis, because there aren't white papers, there's no guidance out there yet. So that's what we do, and we've been seen in these different publications online. You can find us. And we are Dope CFO. We have seen that not having good books and records in place has caused a lot of issues in this industry as of late, within the last 6 to 8 months. All right, so is anybody familiar with any of these cases? This is some of the recent litigation that's happened. Champs is a little bit older. That happened back in the 80s. That kind of set the stage. And that was one that they actually won. So they set the stage for how we can write off cost of goods sold, how you can have separate business entities. One is non-cannabis, one is cannabis. And they won, and that was a success. Then we have Olive. They came, and then they lost. They were trying to do the same thing that Champ was doing, but they didn't do it properly, and the IRS disallowed a lot of their deductions. And so it's important that you're doing your accounting properly so that you can take these cost of goods sold deductions, because we're already paying enough in taxes as it is when we're not taking operating expenses. And then we have AlterMeds, which this just happened, so all the rest just happened in 2018, and it's getting worse and worse and worse. So it's really important that business owners and investors know what's going on financially with their businesses. So in 2018, AlterMeds had $500,000 of back taxes and penalties, and 78,000 of that was just penalties for not doing your books accurately.
One thing about the AlterMed case too, it actually initiated in 2010 when they got their license. The IRS didn't show up as they always do for, I think, 3 years later, and then that led to litigation, and that led to appeals, final decision. So it was an 8-year ordeal for these poor owners who had no idea they were relying on bad accounting and tax advice. And then separately, they had bad accounting as well.
Completely ruined their life. They have no business, no license. I think they went through a divorce. It was just 4 years of litigation. Cannabis, this is the first person who was sentenced to prison for not doing their taxes or their accounting properly, but they were just being blatantly negligent. The owner of this business was open, saying he's not letting the IRS rip him for all these taxes, and he just wasn't paying them and buying fancy cars and things. So he got 7 months prison sentence, as well as about $230,000 of restitutions that he had to pay the tax court, which he paid immediately to kind of see if he could reduce that prison sentence. Then we have Sweet Leaf, when actually they were kind of before Cannabis, but they were just sentenced. So they got 30 days in jail, $2 million in back taxes. The business owners had their licenses revoked for 15 years. They can never have a license, any type of related license in cannabis at all. They were just done for the next 15 years. So out of all of these, would any of this cause a business owner in here to want to commit suicide if you saw a $2 million bill?
That had problems in this last year.
Yeah, well, this last one did result in a suicide. So it's really serious. It's not like, oh, you're getting a slap on the wrist, you did your taxes wrong, you got this penalty. No, these people are losing their livelihood, their license. They've been passionate about this for so many years. So for this one, and this also just happened December 20th, 2018, $2.3 million of taxes between, there was about 3 or 4 owners, and one of those owners just last summer committed suicide over this whole case. They've been in litigation for over 10 years.
A good point to bring up too, some of these people are actually trying to do things correctly, and it's just so complex to do things correctly that they're still losing a case. But then you have someone like, say, Sweet Leaf, where they're selling pot to the same people over and over, that just are blatantly violating the law. Yeah, that's not ever going to cut it. Good books or not, so.
Yeah, so we just wanted to highlight some of the recent litigation. Now, there's another big case. Anybody familiar with the MedMen case? It just
You've read them all. So
came
they're,
out.
and the,
You got to talk to your accountant. This one just came out recently. There are 2 lawsuits, one from the investors and one from the employees.
and the interesting thing about this one to me, because, and originally this, I know we have accountants in here, this talk was set up for CEOs and investors, and so CEOs and investors are often aligned together, but sometimes, as we all know, CEOs and investors, just like husbands and wives, cannot get along. So the investors come in and sue for poor corporate governance. It turns out, the founders of this deal, they're losing, I think, $180 million, but still paying themselves $20 million bonuses. So yes, the founders and CEOs are doing a lot of very shady things, I would say, but the investors, one of the big issues with investing in cannabis, they've been giving huge sums of capital to CEOs and investors without corporate governance on day one, or good accounting practices. I've dealt personally with extraordinarily wealthy investors, both in VC, private angel, billionaire, getting out of deals gone wrong in cannabis. And I'm always like, wow, you wrote a $10 million check or $5 million check without an accountant on board or any controls, where they wouldn't have done this in another industry like high tech or whatever, but for whatever reason, people like to write checks in cannabis. So to me, it's like, yeah, the CEOs are wrong here, but investors, I don't feel that sorry for you, because, you didn't have to write them a big, huge check without better controls in place. So to me, that's a failure of all sides.
Yeah, we're finding that the investors are actually coming and hiring us instead of the owners.
Later,
they're hiring
get
us to
things
make sure
fixed.
that their money is being.
Yeah,
You have a question?
Go ahead.
Yeah, so you guys have a accounting training program?
Yes.
Yes.
That's how Naomi and I actually met. So when I got into the space, I'm also out of Big Four accounting, worked Price Waterhouse. Grant Thornton was audit manager 20 years ago. So have a lot of experience. When I got into cannabis, I was contacting a lot of my contacts in Big Four, looking for gap guidance, industry guides, anything. There was nothing. There's no QuickBooks chart of accounts, no cost accounting work papers. And cannabis is not just cannabis, it's farming, extract, retail, edibles, many complicated industries on their own. And basically what I ended up having to do was create this stuff from scratch, create chart of accounts that worked with cannabis, create cost accounting work papers, create what we call a flower calendar for the farm that are templates, where they each month end close can calculate, do counts of inventory, percent complete, estimated yield per plant, that we can take and do the cost accounting papers. So about 2016, people started approaching me from everywhere. I don't even know how they found me. How do I do this? Do you have a chart of accounts? What do you have? What knowledge do you have? And so that evolved for about a year. I helped people for free. That evolved into a program. We now teach 150 CPAs around the U.S. and CFOs and bookkeepers in 40 states, I believe, as of the last count. So all over the place, and collectively we have, I would say, probably the deepest skill set. We have tax experts, CFOs, MBAs, attorneys, and so we have our own private group where we network daily on any possible entity, structure, whatever question related to cannabis. So that's kind of the background of how we got together. And so we have real cannabis clients for a long time. Our students have many, many more cannabis clients between us, and so we've worked quite a while, I would say, in the industry enough at this point.
So today, this is the meat of the topic. We want to teach you guys 4 keys to achieving financial success for cannabis businesses, so that you guys don't end up on our next presentation as one of the court cases. Okay, so key number 1 is you need to establish a great team. So your company needs an effective MAID, M-A-I-D, to get things done. And that consists of a great management team. You need advisors, a V.I.P accountant, and we'll get to what V.I.P stands for, but you need a V.I.P accountant, bankers, attorneys, lenders, investors, and a board of directors.
What I would just say here, and I think most of you already know this, who have had companies, especially in Oregon, we've been around, and like the last presenter talked about the collapse in prices, you have to be well capitalized or you'll be one of the farms that's being sold for pennies on the dollar here. I know a lot of small companies can't have all this all the time, but they are each piece is very critical if you're going to be successful in cannabis.
All right, now to get a VIP accountant on your team, so who's a VIP? This is somebody who is valuable and knowledgeable in cannabis accounting expert. They are instructors in the industry. They are teaching you as this grows because we need to continuously grow and develop as the industry is growing and as new court cases are dropped and laws are changed. And they also need to be participants who get involved in the cannabis movement. So you want people who are here at these conferences, who are speaking on podcasts, who are part of the movement on your team. You don't want just a generalist accountant who has doctors, lawyers, and dentists and then wants to take on your dispensary as well. They need to be deeply involved in this industry.
Another point on that, there originally when Colorado came around and Oregon and Washington, first states, there actually were not just generalist accountants, there were cannabis tax specialists giving out pretty shady advice, just like to some of the earlier court cases. So many tax returns I've seen where you have sales, say $4 million in a retail environment and then cost of goods sold at $3.99 million on the tax return, that the CEOs had no idea this was wrong. People are actually telling them to get hired. Hire me, we can plug everything to cost of goods sold, you'll never pay tax, don't worry about it. That advice, rampant in Oregon, right here where we talk. I have seen people who have over 100 clients, their tax work that is just, it doesn't pass the common sense smell test, is what I say to the CEOs. So you've got to be very careful that you have someone who has a clue what they're doing on 280E and cost accounting. It's not simple.
Yeah, and to this bottom point, investors, CEOs, everybody needs a VIP, but most important is you want to increase your company value because we know what's happening. Like, it's still illegal, it's still brand new, but then once it becomes federally legal, there's going to be people who are going to want to buy you out. There's going to be mergers and acquisitions down the road. So having this in place at the beginning is going to make you just way more valuable down the road so you can do those $50 million, $100 million buyouts down the road. And that's what our clients are focused on. That's what our clients' goals are. You also need a VIP who has cannabis-tailored accounting system and Workpapers. So Andrew mentioned earlier his background. He didn't have a chart of accounts. He didn't have the Workpapers and things when he was developing these. You need an accountant who has that stuff in place because that stuff you just can't open a QuickBooks file and pull a cannabis company and have the chart of accounts ready. All this stuff has to be done manually. You can't just do a direct feed from Metric into QuickBooks. That stuff, you have to do that manually right now until we develop the proper software and get everything in place.
And I tell the story I tell my kids, because they tell me you can Google everything. You can't Google this. It's I tried to Google cannabis chart of accounts, and I actually found, I think, one old one I got, and someone sold me one. They weren't very good. Both our chart of accounts and cost accounting Workpapers were developed. It wasn't just like I sat down one day or one Saturday and made it. I actually did do that, but then over a couple of years, that evolved with me, clients, other tax cannabis experts, tax attorneys. We did a lot of back and forth and editing, and even our students. So over 2-3 years, we've got a pretty good system in place, but yes, it can be replaced, but it takes time like anything else.
Awesome. Now, key number 2 is that you need a good pitch deck. So you need a macho business plan that includes all the following. So you want all these pieces in there: your marketing and branding, your accounting and finance, compliance, HR, and operations and product. All this must be world-class on your pitch deck.
Where we come in, most of the people, and we're over in the pitch conference, you will usually hear, even Dope CFO, everyone says we've got the best of whatever we're doing. So we just assume that at the bottom. But some people in the cannabis space forget the accounting, finance, and compliance piece. And the compliance, I think the last speech was talking about how you've got the state, the IRS, you've got OSHA, FDA, lots of people to comply with.
All of the court cases fell on accounting and finance. So Sweetleaf, or accounting and finance and compliance. So Sweetleaf wasn't being compliant. They were doing a looping scheme. All the rest, their accounting and finance was just broken.
Were the cases that you presented at the beginning of the presentation, were those, if we had replaced those organizations with non-cannabis companies, wouldn't they have been in violation of the same infractions from the IRS that landed them in hot water?
No.
So
They-
very unique to,
So they were unique because in cannabis, there's a 280E on your tax return. You cannot deduct anything. There's no deduction allowed. There's no credit allowed.
And they
Now,
were
co-
operating as if they were
Yes.
a normal business deducting everything.
They were taking deductions. Well, there was many issues. So if you looked at like the Ultrameds, they were doing basic accounting wrong. So yes, you could get in trouble for that, cannabis or non-cannabis. That was wrong. Oh, yeah, some of it was, and really most of it was incompetence. Their day-to-day records, and this, frankly, is rampant in the cannabis industry as well. You have farmers, really great people, outside growing. They're passionate about cannabis. They're not business people. They're not great at record keeping, and they're not really trying to hurt anyone or anything, including the Ultrameds. They just had bad records. But then they layered on top of that bad tax accounting and their tax returns that were completely done wrong. Again, the owners had no idea. They were just listening to their tax guy. Said, here, we can deduct everything. But the tax guy didn't get in trouble. They did. So it's, buyer beware. And again, that goes back to the V.I.P. You better know who you're listening to. Same on attorneys. There are so many attorneys out there pitching all these entity complex structures. Just set up 20 entities and there's no other purpose but tax avoidance. And again, does it pass the smell test? Do you own a little dispensary there? Do you really need 8 entities? Does that look right? Why do you have 8 entities? They're all over cannabis. I see them almost every client we talk to, whether they're small or big. And so, people think, and so a lot of times people think that, well, my attorney told me this, we're going to rely on it and wait till the IRS comes. 5 years later, you may win, you may lose. So.
Yeah, ultimately, you're the one signing the bottom of those financials. You're the one signing the bottom of that tax return. So you're the one that's going to be financially responsible for it. And if you were to go back and look at those court cases, the Champs case, the attorney, the one that won in the Champs case was the same attorney for all the others that lost. So he won and he had a victory and he was like, I'm getting this attorney. And then I guess he just started getting bad advice, or maybe the laws changed.
The Champs, they were doing good record keeping and proper divisional and class accounting. So that is the good news. You can do it correctly and get a good tax deduction. But most people aren't doing it. So go ahead, is the compliance department. So we're just talking about the IRS. We're not talking about OSHA or the FDA or the state. The state is now state of Oregon. All states have their own rules. They'll come in and they shut down someone in Bend they only had 30 days of backup on their camera instead of 90. It could be, I worked at High Five Farms. We had to rebuild the fence because it was a foot too short. You could see it from the road. I mean, there's hundreds and hundreds of rules of all types, and you got different departments you're answering rules to. Most people, nobody likes compliance, and most of these companies are in the compliance individual. Nobody's monitoring the new rules, and it's a headache. Just like I'm an investor in a farm. We applied, I actually have all the documents where we sent the fingerprints and the original documents to the OLCC. Somehow they got lost and they're sending 30 investors all over the U.S. has to be re-fingerprinted. And so it's mind-boggling.
Okay, so compliance. This is what keeps your operations clear. So you have controls. You're constantly learning because this is going to continue to evolve and change. You need an employee who works full-time in your compliance because it's really difficult to keep up with it if the person is doing 20 other different tasks. You have to have all SOPs in all compliance areas, so OSHA, FDA, cost of goods sold, everything, all SOPs for your business. And then you have to have a system of resolution. So anything, if you have a compliance failure, how to resolve that instantly and clear that up so that you don't get in trouble down the road. Because these audits come very late. A lot of those audits were from 2010, 2012, and it just got finalized in 2018. So just because you got by and it's been a year or two doesn't mean that they're not going to come back and look at things in the past. So it's important to resolve these things as they occur. And key number 4 is you need a world-class cannabis accounting and tax finance function, which you need a dope CFO. So you don't need me or Andrew, but we do have a network of accountants who are trained, who live this, who are inside of doing accounting for cannabis, and this is all that we do day in and day out. So it'd be good for you to find a dope CFO if you don't have an accountant in place.
And I will say too, this, with the dope CFO or someone specifically, it's someone involved in the day-to-day accounting and setup and running monthly financials. This is not just the person that comes in and does your return at the end of the year, because it's very crucial. Actually, it's required under some of the IRS regulations. You're doing GAAP accounting quarterly at least, and so you need more than the person who shows up in April.
Yeah, like little things like that. Like a lot of small businesses, if they're not, when you're just starting, think, okay, at the end of the year, I could just get the tax guy to do my taxes. Well, your only deduction is cost of goods sold, and your cost of goods sold deduction will be disallowed if you haven't been doing quarterly financials. And so those are the types of things that get people in trouble, because you don't know all those little nuances, and that's why you need a cannabis-trained accountant who know those different things to make sure that you don't get in trouble down the road.
And so just to be clear on that, in 47111, if you're not doing GAAP quarterly financials, you're missing out a whole section of deductions. So there's things you can deduct whether you're doing GAAP or not. There's things you cannot deduct whether you're doing GAAP or not. But there's a third category, things you can only deduct if you're doing GAAP. So I tell all CEOs, I've never heard someone tell me they knew about that third category, and I say, well, then there's only two resolutions if that's the case. You're either missing a deduction or your CPA is taking it incorrectly. So it's not good either ways.
So we just have this framework of what it means when you're in the dope zone. So in order to have a sound business, you need the CEO, you need the investors, you need the money, and you need a VIP accountant who understands how to do this. So if you only have the CEO or the investor, then you're in the disaster zone. That's what's going to lead you to litigation, because you don't have that accountant in place who's going to keep your books and records and that investment in line. If you only have a CEO and an accountant, then you're on the struggle bus, because now you need money. You're not going to be able to pay. You're not going to be able to make your payment to your accountant. Won't have the accountant for very long there. If you're just an accountant and an investor with no business, then you are in the land of nothing. Where we want to be is right here in the dope zone. And when you're in the dope zone, your books and records are audit, investor, and lender ready always. You have a higher company valuation down the road. There's transparency in your books, and there's no ticking time bomb. You don't have the IRS coming back at you 10 years later saying, or 5 years later saying, let's look at your 2012, let's look at your 2014 books. You already know that they could look at it all they want, because you have a VIP accountant who's keeping them clean for you.
I had a quick question. I have a number of companies using a strategy where they have a management company and they're trying to, or actually, moving over cost of goods sold. And I wanted to get you guys' opinion regarding that.
So that's where you have to be very careful. So from the IRS viewpoint, everything you do has to have a legitimate purpose. So if you have, whether you have 3 companies or 50, and I've seen some flowcharts with like 20 companies with arrows going every which way, and if there's not a real purpose for the structure or what that legitimate reason, so sometimes, I'll give you a good example, you could own a farm that's growing cannabis, and the farm could be held in one entity, and a legitimate reason is for asset protection. It's illegal. People do that in non-cannabis companies all the time. They put the real estate in one company, the operators in another company, and they charge each other rent. But in cannabis, there's a lot of structures out there that are just, there's no real reason. So let's have the management company over here, and we'll pay all the employees over here so we can get deductions for, say, marketing or whatever that we can't get on the cannabis side, and then we'll get deduction that way. And we'll use intercompany transactions. I think we're going to see a lot of those come up in the next year or two, that the IRS is going to be winning based just on that.
It was just in California regarding model management, and the IRS ruled that it was still trafficking because the cannabis company was paying the holding company. Okay. And so the IRS ruled that they were still trafficking.
Yeah, and so I think where you have to be careful of, the attorney comes in, they just want their fees. They're going to say, here, why don't you do this? I don't know if it's going to work or not, because until these things are tried in court, you don't really know what's going to happen. And so they can give you, all from very aggressive to less aggressive strategies, and they're going to be fine, but it's whether or not you're going to be okay when the IRS comes in and Naomi said, they come in much, much later after the fact, so you can't go backwards and change it. And so it's just making sure that they're very legitimate setups. Like some people have an equipment company that does equipment leasing. That could be a good strategy. I have a client who has an IP company. And so how do you make a company look legitimate? So he does some branding work for his dispensary, but he also serves other clients. So if you can show that this is a real company serving others and not just, oh, here's your company A serving company B, that doesn't look very good. And so you want to have it be standalone, and wherever possible, if you can get serving other customers in any management company, like say you're a property manager for real estate, it'll look better if you're serving other people than just yourself. Because outside of cannabis, that you'd never see that. And then we saw another dispensary, I can't remember where it was, that had, I think it was a surf shop, and they actually had really big clothing and other sales that were like very, very big. Because then you'll see a lot of dispensaries selling 10 grand of hats and t-shirts and 3 million of cannabis and trying to deduct a lot on their t-shirt business. That doesn't work either. So if you have a non-cannabis division in dispensary, it has to be substantial, whatever that means, but it doesn't look good, again, if you have 20 grand of t-shirt sales and 5 million of cannabis. It has to be profitable, that whole division. It can't be 20 grand of t-shirt sales and then those put in $1 million of costs. And it has to be well documented in your monthly financials, not just at tax time, that you're actually using monthly reports. So you're having to do some kind of class accounting in QuickBooks or whatever. Go ahead.
Hemp is considered cannabis family.
Yeah.
Now that we're industrialized hemp growing in Oregon. Does those cannabis rules come, or is it just under standard farming practice?
So on the hemp, well, it just got legalized. So 280E will not apply to, I'm trying to think about it, should say something. I don't think 280E is going to apply to your hemp farm or whatever, but I believe the latest is FDA is going to regulate it, so there'll be other issues around the FDA regulations. But on your tax return, if 280E doesn't apply, that means you can deduct other things. Now, if you still have a farm, your accounting is still complex. Plant counting is not simple. So you have to account for the cost of your grow and allocating direct and indirect labor and parts of your fence or rent or whatever it is, utilities, into the farm. So you still want to do good accounting to get the maximum deduction. So under 47111, that's non-cannabis regulation. So if you're filing under that, you still would want to do gap accounting to maximize your deductions if you're trying to minimize tax. But 280E wouldn't apply, and 280E is just one sentence in the tax code that says if you sell drugs under Schedule 1, you can't deduct anything. But CBD and hemp will not be Schedule 1 anymore.
So by that, you're saying it is applicable for traditional deductions, cost of goods sold, et cetera?
Yeah, for hemp and CBD, just not 280E. So like a hemp company can deduct advertising costs. A cannabis company can't.
Okay, thank you.
Are you saying they can't federally or both state and?
Federally. So this is we're just talking the federal tax return. So 280 is a federal code.
Any more questions?
Well, thank you, everybody.